you focus on the rates all the time, people are going to be like, oh my gosh, it went up a quarter, so I'm not going to buy now. Or if you focus on the payment, we know that doesn't make a huge swing. So we're the advisor, and we really have to keep them focused on those type of things. And I tell everybody, I don't say no, I tell you how to get there. So giving them those opportunities to know that they could get into homeownership and don't have to be embarrassed, I think is really important too.
Welcome back to Good Better Broker as we welcome in Ashley Bedford. She is a mortgage broker with Aptly Home Loans, and she is based in Orlando, Florida. Ashley, great to have you here.
Thank you so much for having me. I'm excited.
So a bit about you, Ashley, for our audience. You got into the business back in 2015. Last year, as you were just telling me, you did $265 million in volume.
265 units.
So my bad. I was going to say that, I mean, we know you're good, but that would be incredible.
Like 90 million.
265 units in 2025. But to repeat, that was by yourself. And you do have a team that you work with. You guys are purchase heavy shop, realtor focused, and you were all self-gen LOs. This purchase powerhouse moniker that someone told me about you, tell me how it came to be. Why did you decide to focus so heavily on purchase business?
Purchase business is always going to be there. And I think that's the most important. Like when everybody was going through COVID, they were all focusing on refis. In my opinion, that's the shiny penny moments. And they've already had your service, right? So they know that they're going to stick around and we're going to get them closed. And it's not as urgent, right? Like, of course, we know we have these little pockets where we can refinance, but your realtors are going to be the constant people that send you back those people to refinance so that you're not having to buy leads. So you have to stay focused on them. And that's how I got so many realtors and referral partners now, is that I stayed so focused on that during COVID while everybody else was dropping the ball because I had so many units to do of refinances. And they were like, but those people are already in their homes.
Does that still come up with your realtor partners, the fact that you stayed in touch with them, you stayed in front of them during the pandemic when so many other LOs out there were just picking that low-hanging fruit, meaning refis?
Yeah, and especially because I ask them all the time, what's the number one thing you like about me? First, that I answer my phone, and second, that I close deals. And you would think that would be normal, but really it's not. So just closing deals is the most important thing for them.
Ashley, how are you helping people get off the sidelines and get into home ownership? Because this is such an important topic in the industry right now, helping those first-time home buyers. What has been your approach?
So I don't really focus on rates. A lot of people call and ask me, what's the rate today? And I said, well, that's subjective, depending on your application. So we focus really on payment and feasibility for the buyer because rates can change. Like, I mean, we saw what happened in 24 hours. And so rates can always change. And if you focus on those payments all the time, or if you focus on the rates all the time, people are going to be like, oh my gosh, it went up a quarter, so I'm not going to buy now. Or if you focus on the payment, we know that doesn't make a huge swing. So we're the advisor, and we really have to keep them focused on those type of things. And I tell everybody, I don't say no, I tell you how to get there. So giving them those opportunities to know that they could get into homeownership and don't have to be embarrassed, I think is really important too.
How do you go about shifting that mindset? Because so much of the narrative surrounding mortgages is about rates. So what do you do to get people to focus more so on the payment, like you were just talking about?
So when they talk about rates and they're renting currently, for example, right now I'm like, well, you're paying 100% interest. And then we talk about, you know, car interest. The average car interest is like 7% right now. And credit cards are 29%. So they're going and spending on their credit cards without thinking about that 29%. But so let's focus on payment feasibility because you were okay with that minimum payment on everything else. So let's make sure you're okay. So it's much like the car world, right? Like just getting that minimum payment there to where you want to be.
Your handle on Instagram. Let's talk about this. It's Ashley, the Mortgage Magician. And you were telling me that you kind of go by this nickname, the Mortgage Magician. How did this come to be?
So I saved a lot of loans over my years, and that's how I've gotten a lot of referrals because it just kind of spread like wildfire once I started. And when I got into the business, I did manual underwrites only. I saw all these feeds on Facebook and Reddit and so forth saying that people were not closing right before closing. So I called every title company in Central Florida and was like, do you have any loans that aren't closing? And then finally someone sent me one that wasn't, and I closed that buyer in 10 days. So it kind of stuck.
And what does that do for you, like on social media, when people come across you and see that you are the Mortgage Magician?
So it gives them confidence to know that I'm probably going to be able to close their loan, and we're not doing anything out of the ordinary. It's just a lot of times they're going to these retail lenders that maybe have overlays, or they can't do their low credit score, or they don't understand the guidelines fully for people to be able to get loans. And so I'm just not necessarily doing magic, but just making sure that they're getting into houses.
Your own version of magic. We can call it what it is. I've talked to so many clients over the years, and anybody who has found themselves in a situation where they get to save a deal for a client, the amount of referrals that can come from that is overwhelming sometimes. Yeah. What has that been like for you in situations where you have bailed somebody out at the last minute?
Well, not only are you getting referrals from that client, but I've earned a lot of realtor referral relationships through that. Like I recently had somebody, and they were first-time home buyer, because a lot of this happens with first-time home buyers because they don't know. And we know that a lot of people are doing soft pulls up front and not getting all the documents, and they're giving pre-quals, and they don't know the ins and outs, and then last minute they're declining them. So these realtors, you have sellers on the line that are looking to move maybe too, and so you're getting the listing agent referrals and the buyer agent referrals, and then they're telling their friends, because the real estate world is very small, and so you're getting more and more referrals from that. But just being able to be knowledgeable, and sometimes I don't even take the deal, to be honest with you. I help the other broker close it too, because it's best for them, and I actually still get referrals out of that because they said, you did what's best for the client at the time.
In your mind, what are the biggest keys to being somebody who's great at saving deals?
Verifying everything up front. Like, don't do anything halfway. Like, you really have to do everything up front. Like, I require all documents prior to, like, you're not getting a pre-approval. That letter is my reputation, and if we squander my reputation, I'm not getting, like, that listing agent may not take one of my other buyers' deals because something didn't close. And so you have to think about that perspective. And so getting all the documentation up front, making sure that you can do it. And I mean, as long as you're doing that, you're going to be golden.
You live in Florida. And of course, we know that there are a ton of condos in the state of Florida. And this is one area you have really excelled in, saving condo deals. How has this part of your business helped set you apart?
So really diving into condos and all the state regulations, because we know that in Miami, a condo fell to the ground, unfortunately. And so that really upped what had to happen. And already Fannie Mae and Freddie Mac both have guidelines in there that require us to put 5% more down for everything, right? There's specific Florida guidelines for condos, which is crazy. But it held people accountable, right? But the problem is that when you already don't know condos and you're going into, and you don't know the new regulations, you really have to dive into that and build relationships with the condo people. So thankfully, I've been able to be on pilots and betas of like getting listings approved and educating and making sure that people understand like what is required, because you have a group of volunteers running a condo association. They don't know what insurance, what kind of things that go into lending. So just educating is huge. But I've also been able to get a ton of referrals from it. And then using the approved condo list is great. So it's just educating.
You were telling me about a story of a condo deal that you saved for an agent, and this was super cool, and I want you to share this with our audience too.
Yeah. So I had a condo that was declined by another lender, and they said they had reached out to Fannie Mae and Freddie Mac and they told them they couldn't close. I called UWM's condo project team. I have a few friends in there, and I said, hey, is this true? Like, can I do this? And they're like, yeah, you can do this, Freddie Mac. And so it's just knowing the guidelines. So it was the same loan, and we were able to close it in 3 days. Well, we couldn't close it for TRID, but we were able to get it clear to close in 3 days. So, and this buyer was so terrified to even go with me because he was a first-time home buyer and got declined. And I was able to get his down payment lower because they told him he had to put 25% down, and he only had to put 3% down because he was a first-time home buyer.
This is the second time in the conversation that you've mentioned first-time home buyers getting burned or getting denied. I can only imagine, the mental side of that, what that must do to your psyche going into this for the first time and thinking that it's not going to happen for you. And then someone like you comes along and says, no, I got you.
Yeah. And at first they're skeptical for sure. So they're skeptical. The realtors are skeptical because they think they've exhausted all the things, but they haven't. And in this same exact condo project, this happened 2 times before in the same project where another realtor called me and I closed the loan.
So on the subject of first-time home buyers who, of course, going into this kind of blindly, they don't really know what to expect. You're really big on education, and one of the ways you leverage that is through your social media platforms.
Yes.
Tell me about that.
So on Tuesdays, we do Tuesday market update, just trying to explain the market. Like, nobody understands the secondary market like we do. They're like, what? It's a secondary market. So just explaining it in very layman's terms so that the world can understand it. So realtors can understand it, so buyers can understand it, and they can share that knowledge forward too. And it builds trust and confidence because they know that we know what we're talking about, and we're not just, this is people's biggest financial decision in life. Like, we should educate them and know what we're talking about too. And then also I'm a big proponent of don't let perfect get in front of good, like Matt says. So I just do the social media. Like, it doesn't matter. Like, if an article comes out, I just hop on. Let's go. Like, I've been in my pajamas before and done a green screen in the back. Like, you just have to do what's there. Just get the information out. And also don't get discouraged if people don't like it, because I have so many people that will reach out and they're like, oh, hey, I saw your HELOC video and maybe I had 3 likes on there. And so don't think likes matter and shares, because people may have just saw it and they didn't like it. But
yeah, I was going to ask you about the impact of your social media content, and that just goes to show you what you just told us, that it doesn't always matter how many clicks you get, how many likes you get. One phone call for one video can make it worth it in itself, right?
Absolutely. And I've actually gotten a real estate team from my social media. Like, she said she'd watched me for a year and then sent me a deal. So it was great.
Is that more you think about just being consistent with it? Because if I went on your social media channels and you post a lot, and like you said, don't let perfect get in the way of good. Is that consistency a key to that success?
Yeah. People want authenticity too, and consistency, because the algorithm's going to kick you out if you're not consistent. So staying consistent is important for your algorithm. Like, we had social media challenges at the office too, and it's crazy to see the reach that you get if you consistently post for 30 days. Like, we saw it off the charts, like 30,000 people in 30 days. So that's what you want to see. You
have this other segment that you do called Understanding Mortgages in 15 Seconds or Less. And when I saw that graphic on the tile for one of your videos, I said, how can somebody possibly explain any topic in mortgages in less than 15 seconds? So I need you to explain to us how you do that.
So we have a list of terms and we just explain one at a time. And I try to make a little funny joke in there on each one. And then we just put them in the little bubble so that, 15 seconds of video. And sometimes we retake it because I maybe went 16 seconds, and I really do try to make sure it's under that 15 seconds. But yeah.
And I'm sure a lot of people click on it because they have the same question that I did. How did she do this in such a short amount of time?
Yeah, because nobody knows what P&I is, most people, so just explaining those type of things. Even the biggest question I get is, what's a second home? Which is crazy because they think it's just buying a second home, not like they think it's buying a second primary, not a vacation home. So we take advantage of what we know.
You also take advantage of the fact that you have realtor partners who want to do social media content, and they don't have the same setup that you do.
Yeah.
So how are you helping them when it comes to their content?
So we have an entire content studio with a podcast room, content studio, and also a classroom. And so every Tuesday I open that up for them, and I have different sponsors bring in lunch or like snacks and things like that. And we just hang out and work, and they all record their podcasts, because if they go to a podcast studio, it could be $100, not even edited, just to sit in there and record. So this gives them access for free.
Super smart. And we love to hear that people are, or our clients are out there helping their referral partners do that kinds of stuff. Because like you said, it can be a bit daunting to find where to go and to have to pay. But I think it's great that you guys are doing that. Let's talk a bit about events, because, this is kind of changed for you over the years. Your focus on, which events you're doing to kind of spotlight your referral partners. So what's the approach right now?
So I do thank you events. I have some sponsors, but I don't allow like weird vendor tables to be set up. I'm a relationship person, so they know like you can come in and you can introduce yourself, but we're not going to like have weird flyer tables. That's weird. Okay. They're not salesy. They're just thank you parties. So for example, I'm doing one right now where we're going to go to a local business and we're going to paint signs. That's mostly women realtors because not a lot of men RSVP to that. But then I'll do a luxury one, and it's just a thank you. Like, we'll have a few little appetizers and drinks and just thank you. That's it. And I did headshots at that one last year, and then we'll do another one throughout the year, a pumpkin patch for families. So
you do so much, and you and I were talking about this a little bit off camera before we started recording. How do you find time for it all? I mean, I know you love your job, but like, how do you fit everything into a day, a week, a month, and a year?
I have an amazing event planner. And so I pay her to do all of my events and invitations and stuff. So that is taken care of, which is great. I just have to show up. And then I have a processor, and I have an LOA. So that helps me a lot. But I am a little bit crazy, and I do work a lot. So
But you love it.
I love it. I'm passionate about this. I love it.
And part of your why came from your own personal experience when you first tried to get a mortgage. Is that right?
It was because I had called a particular lender and they told me that I needed $30,000 for a $189,000 house. And I'm in my early 20s and I'm like, I don't have $30,000, nor can I imagine having $30,000. And so I had called, someone told me to call a broker, and I did. And I walked into the house with $13,000. I sold my first car for that. And so that helps me tell my buyers, like, I won't ask you to do anything that I didn't do to achieve homeownership. So I'm able to give them that story, which helps them as well. And I thought, I want to do this for everybody else because housing provides stability. I can think about people that I've helped 10, 11 years ago that their kids were able to go to college and get cars because their payments stayed the same. And so, whereas if they were renting, we'd be at almost double this point.
It's a great story. It proves, that you're doing this not just because it's your job, but it's because it's something you care about. To wrap things up, I want to ask you for your message to other LOs out there, because we started the conversation talking about your purchase business, and it's kind of been a theme throughout our conversation. What is your advice to other mortgage brokers and LOs out there on why they should stay purchase heavy even when rates do come down?
Because you're going to lose your referral partners if you don't by chasing that shiny penny, and refis aren't going to last. Like they're very pocketed, right? And imagine even if over the last few weeks I just 100% stayed focused on refis when rates came down, they were chasing that shiny penny. And we know that even when the news is out there saying, oh, refi rates are down, like we may not be down enough, especially in Florida. Refis are expensive in Florida. So it really has to drop to make sense. Be the guiding light to your clients, if that makes sense. And then also make sure you stay communicating. Don't walk out of the file just because you have a processor. I think that's the biggest complaint that I get is that, are you going to be the person I talk to all the time? Absolutely. I'm going to be your main point of contact.
Great advice. Ashley, we appreciate you joining us and wish you nothing but continued success. Ashley Bedford with Appley Home Loans. Thanks so much for joining us.
Thank you so much. I appreciate you.
Thank you for watching Good Better Broker and helping us support independent mortgage brokers everywhere. Be sure to subscribe to our YouTube channel to be notified about new videos, as well as your preferred podcast platform for a new episode every other Tuesday.